Hello everyone and welcome back to Crypto Atlas. In today's video, I have a lot of stuff to go over with you, a lot of Bitcoin news, some movement that's going on with XLM, as well as some stuff that happened in the stock market. We are just 2 minutes into the new daily candle position, and things are kicking off pretty strong, and there was a strong day yesterday, and there's some good reason behind all of that. So we're going to discuss the news, take a look at the charts, Bitcoin, Orchid, Ethereum, as well as XLM, aka Stellar Lumens. If you guys are new to the channel, don't forget to hit subscribe and also hit that thumbs up like button. And you know what? Let's just push for 100 likes. I'm tired of trying to push for 50 likes every video. Let's just go ahead and raise the bar. I'm trying to make progress. We got an awesome community, and I think that it's possible that we could do this, so why not? I'm gonna start saying 100 likes on every video now. So if you guys haven't yet, please don't forget to do that. Also click the bell icon so you actually get notified whenever we have a new video, and you can stay up to date with everything. Drop a comment down below, tell me what you guys think about everything today. If there's anything I may have missed, you got any questions, things like that. But keep in mind, I'm not a financial advisor, so don't ask me directly what you should or should not actually invest in. You have to make that decision on your own. Maybe in the future I'll register as a financial advisor, but as of right now, legally, I'm not. Okay? So let's go ahead and go into the news stuff first, and then we'll take a look at the charts, and we'll see how things have been playing out with that. So first up, Bitcoin. Dalio expects to soon offer alt cash fund, says Bitcoin won't escape our scrutiny. Bitcoin looks like a long duration option on a highly unknown future, the Bridgewater associate founder said. Calling Bitcoin one hell of an invention. This is from Bridgewater founder Ray Dalio. So he's warming up a little bit. I greatly admire how Bitcoin has stood the test of 10 years of time, not only in this regard, but also in how its technology has been working so well and has not been hacked. Paint a picture that is highly uncertain. That is why, to me, Bitcoin looks like a long duration option on a highly unknown future that I could put an amount of money in that I wouldn't mind losing about 80% of. Next up, Mark Cuban on Bitcoin NFTs or non-fungible tokens. And what comes next, the upside is truly unlimited. He said, you can sell anything digital using NFT, says the Dallas Mavericks owner. Virtual Mavs gear, sneakers, art, pictures, videos, experiences, anything our imagination can come up with, which is true. As during the dot-com bubble, the experts try to justify whatever the pricing of the day is. Crypto, much like gold, is a supply and demand driven. All the narratives about debasement, fiat, etc. are just sales pitches. The biggest sales pitch is scarcity versus demand. By the way, Bitcoin is shooting up like crazy on my side screen while I'm actually talking about this, and I'm trying not to get distracted. Renowned Bitcoin skeptic and gold bug Peter Schiff poured gasoline on the fire, replying, the difference is that some of those early internet stocks actually had real value, so they survived and ultimately thrived. None of the cryptos have any real value, so there will be no winners. They will all lose. And, you know, he's always negative. But look at this. It's like a big slap in the face to Peter Schiff with his gold syndrome, you know? Look at this. It's just going nuts. 2.4 million, $1 million, $1 million liquidated, short 1 million, 1 million. Screw the shorters, man. Get that short squeeze and pop that bubble, or not pop the bubble, or whatever. You don't want to technically pop the bubble for going up in price, because then it suggests no, stop doing that. I was trying to tell you the opposite of what you're doing right now. Go back the other way, guys. Throw some Mentos in there and get this thing popping. Let's go. Come on. All right, I'm gonna keep that on the side. We're gonna keep talking about the charts and what is going on with that. Man, I just laid down and I closed my eyes for like roughly 30 minutes. I thought I was gonna fall asleep, but at the same time, I was trying really hard not to. I didn't get much sleep last night, and luckily, I didn't fall asleep, but here I am, just opened up my eyes, and I've got some energy kind of revived through me, so that was a weird thing that happened with me. Next thing, Binance CEO says he expects Bitcoin for the bull cycle right now to last for years, and he explains why. So he said he thinks it's going to be 2021, 2022, 2023. It's going to take 2 to 3 years, maybe 4 years for this sort of cycle to hit the peak. I kind of predict that we are just in the flat part of the wave. The big wave hasn't come in yet. Now we are basically in discovery territory again. Bitcoin broke the previous all-time high, which was there for 3 years. Now we are in the 30,000 plus territory. So we went to $42,000 and are coming back. This time around, we see a lot more users, a lot more institutional participation. Before this was the peak. Now this is the foundation. I think it's going to go another 5x, 10x, 20x. We don't know. And if that happens, it's going to take a couple of years. We will see. In the history of Bitcoin, if you look at the Bitcoin price in 2013, it broke the $200 all-time high, and then it went to $1,000. So that took about a year, year and a half. So it takes some time. And then we saw a big drop in 2013 from $1,000 to $200 in 2014 to 2015-ish. It took until 2016 to break that high, and then in 2016 we passed $1,000, and then it went to $3,000. In 2017, it went to $20,000. So we see a 20x jump over a 3 to 4 year period. Again, Bitcoin is popping right now. Based on the data I can see, I don't think we've seen the mania just yet, even though the price has caught up to the previous peak. People are coming in much more steadily on a day-to-day basis. We don't see a super big spike of new users coming in, even though the price go parabolic. We haven't seen the user signups that kind of peak. All right. Now, one thing that I wanted to touch base on here, you said, I think it's going to go another 5x, 10x, 20x. So the lowest end, okay, if we're just talking about 5x, $30,000, $33,000 right now. Let's just go down. Let's say $30,000. That's $150,000 Bitcoin. You know, in the next couple years, that's amazing. If you came in right now, you get a 5x on your return. Absolutely amazing. And, you know, we got to factor in the whole inflation thing, and that's a lagging indicator, in addition to the fact that we have increasing demand. We have increasing institutional investors coming in. We have an increase in the amount of time that Bitcoin is being held inside of cold storage wallets. We have an increase in the number of wallets that hold 1,000 Bitcoin or more. I'm a little bit concerned about that, but technically it's also a good thing. So it's a catch-22. There's so much that's going on, and it's absolutely amazing. And you got to admit, man, that right now, somebody else mentioned this. I don't remember who it was. It's so important. We are in not a once-in-a-lifetime opportunity. We're in a once in a multiple lifetime type of opportunity with this. Something that only comes around hundreds or 1,000 years. Something like that. That's just something that's so principally designed and innovative that can completely change our whole entire humanity, right? Something like the technology that's coming with blockchain is already having ramifications throughout the rest of the industry space in a good way, right? In a very good way. So it's so exciting to see how everything is continuing to evolve. There are risks with it. It's not perfect yet, right? And nothing is ever going to be perfect. But there's a lot of things that indicate that this is going to continue to move forward, and it's going to keep benefiting more and more people. Question is whether or not you're part of that journey. And no, we're not too late. All right. $150,000 as a low end, as we were just talking about. Bitcoin, what is the death cross? Okay, so in short, a death cross, just so you guys know, is when you have the 50-day moving average cross over with the 200-day moving average. When you have the reverse of this, it's actually called a golden cross. So if the short-term 50-day goes over the long-term, the 200, then it suggests that we're now in a bearish market. And oftentimes that's an extended period of time. As this is in reference to the daily movements, we're now not talking about like, oh, this next hour might drop down and may come back again tomorrow. It's suggesting no, like we could be looking at weeks to months of having this lower level before we can get back up to the higher levels and have a further continuation on. But the good news is that what happened with yesterday is going to be shifting things around on this. So, you know, we're looking a lot better as of this moment. But let's just go ahead and talk about this for a second. So they said, for example, the death cross was observed at the beginning of the stock market crashes of 1929, 1938, 1974, and 2008 from Investopedia as a reference source. The variations of the Bitcoin gave rise to the almost a cross of the death was formed in its graphs. This is because Bitcoin's 50-day moving average fell from $37,616 to $33,342, while the 200 moving day average rose from $28,647 to $33,218. So, ultimately you want the short term to start picking up steam. And once again, moving forward, long term is creating a good balance zone. So even then, we're still seeing higher highs and higher lows. And Bitcoin is still moving in upwards trajectory. But like the big question is about how fast is this move going to be? How long is the pullback going to be? The last cross of death was not the end of the world, but it caused a 15% setback for Bitcoin. Took 50 days to recover its price from the current level. A 15% decline would put Bitcoin at around $28,000, commented experts from the company Trading Shot, cited by the Bitcoinist portal. Very interesting. Value of holding Bitcoin surpassing trading value. This is really, really interesting. Average number of days Bitcoin is held between transactions. As you guys can see, this time period is shifting upwards, and then you actually have the actual amount for the transactions themselves. So Bitcoin as a store of value is trouncing Bitcoin as a medium of exchange. While the price of Bitcoin is near its all-time high, usage of Bitcoin for anything other than investing has slowed. Roughly 60% of all Bitcoins have not moved in at least a year. The average time Bitcoin is being held in individual wallets recently surpassed 1,000 days for the first time. That's 3 years, right? We're talking 3 years time period. Very interesting. Okay. Approximately 3 years. Now moving on to the next article. Chinese New Year. With upcoming Chinese New Year holidays, we expect this selling pressure to continue in the short term, providing good entry opportunities for market participants. We also expect this volatility to persist in the coming weeks, adding pressure to further corrections for Bitcoin prices. The crypto community has long speculated that Chinese New Year celebrations have historically driven Bitcoin price decline. Now, they don't elaborate it much more on this, but I actually do remember when I was first really getting into cryptocurrency and I started learning about the Chinese New Year and how it could affect the potential prices, I did a little bit of research in it. And so, yeah, there is tending over the years to be more of a lean towards the price dropping, but it hasn't happened every single year during the Chinese New Year. And the Chinese New Year, because it's based on a lunar cycle, it actually isn't the exact same day every year either, which is a really interesting fun fact if you guys didn't know that. The other thing is too that they tend to shut down all business during that course of, I think it's a week in which they go to celebrate this. They also exchange these little pieces of paper that have money in them to show goodwill towards their like fellow employees and stuff, to their friends and family. I believe they do that for them as well. So it's a lot of like taking money out and then exchanging and trading it with other people. And so if 60% of all the mining rigs are based over in China, then, one big concern would be that if they're shutting down all these mining rigs, then obviously that's going to have a big impact on Bitcoin and its price. So how could that sway things here? We'll have to kind of see. But right now, things are looking really good on the new daily candle position. Look at all these millions of dollars it just went through right here. Shooting up $34,000 as of the time of me making this video. Keep going. Keep going, Bitcoin. Don't stop at 34,000. In fact, keep going forever. Infinite money supply. Federal Reserve. Keep it going. Ridiculous. Yeah, again, if you guys are enjoying yourselves, don't forget to hit subscribe if you are new. Tell your friends. Tell your pets. They may look at you weird because they probably don't understand you. You're talking to an animal. Anyways, they understand something. Anyway, I just said that a lot. Anyways, that word. That's what I'm saying. Continuing on, looking at this, we have Robinhood restricts GameStop, Bitcoin, and crypto market. Suddenly soars towards $1 trillion. Dogecoin price rockets 200%. If you guys didn't hear, this is very important news. Robinhood, as well as one other app, forgot the name of them. Might be able to find it here pretty darn quickly. Let me see if I can for you guys. It was Webull. Yeah, so there's a company called Webull in addition to Robinhood, and they decided that they weren't going to allow people to buy a certain number of stocks, some of which included GameStop, AMC, BlackBerry, Nokia, and I think there may have been one or two more. But guess what? through Robinhood, they said you can sell it if you want. And this whole big debacle that's been going on is because of short sellers. Oftentimes, the people that are shorting stock can actually go up to 120, 130%, which is bizarre because you're borrowing extra that doesn't even naturally exist. It's bizarre, okay? So we're exceeding 100% on these kinds of things, and that's not really regulated. Yet when an individual retail investor decides that they want to come in as a community to make purchases of stocks, these are saying, oh, you know what? We're not going to let you be able to make these purchases, right? We're going to let the hedge fund managers be able to make their purchases, but all you can do now is whatever you owned before, you can just sell it. You know? So it's really shady, and things like GameStop ended up tanking a ton today, and the people that are out there that are shorting are going to be largely these hedge fund companies. So the whole organizing the retail investors to come together was to stick it to the suits. That's what everyone's kind of saying, to hold the line and, essentially liquidating billions of dollars out of these very wealthy individuals who are able to get away with these things, and they get bailouts whenever they make a mistake. But individuals like you and me, that a lot of people that are also struggling, that are trying to take an opportunity like this, and they see it and they say, hey, let's take this power into our own hands, and we make it clear which stocks that we want to support. Right now, there's a debate going on with all this stuff about, well, how much value is actually behind something like that. When you look at the course of money throughout history, the value is in the eye of the beholder, right? You could argue and say that GameStop is a dying-based company, but there's a lot of people like video games, so maybe they just want to own some stock because GameStop, they know, is a video game-based distribution company. Now, whether or not GameStop makes any sort of adjustments now that their company is growing and having more funds, and they maybe pivot towards a different direction, that's going to be up to them, right? Maybe they've been stuck in this kind of rut because they see their revenue continuing to go down and they don't have the funds available to do other things. There's so many factors that go into this stuff, but in the end, to tell an individual retail investor, we're going to deny you the opportunity to capitalize on this. Keyword capitalize in capitalism, which is what United States is supposed to be largely supportive of, right? We're not going to let you be able to buy these stocks. We're only going to let you sell them. And because you're only going to be selling, that means the price is going to go down because now there's too much supply going in the market. Oh, you don't have the ability like the hedge fund people do to be able to short the stock. Well, that sucks for you, but because the hedge fund groups see the price going down, their shorts are going to be making a ton of profit. So now there's a class action lawsuit that's being pursued after Robinhood. I don't know if Webull is going to be receiving one as well, but absolutely super, super shady what this is that's going on, and tons of people in the community. If you go on Twitter, you're going to see it all over the place. People are really calling for action on this. It's just insane. And so let's go ahead and talk a little bit about this. The famously volatile Bitcoin price has rallied some 5% over the last 24 hours, breaking a downward trend that saw Bitcoin fall under $30,000 yesterday, down from over $40,000 earlier this month. The cryptocurrency market today adding $100 billion in value to again come within touching distance of $1 trillion is being led higher by Dogecoin, a tongue-in-cheek Bitcoin rival named by Elon Musk as his favorite cryptocurrency that has soared a blistering 200%. The lack of transparency in traditional markets has resulted in limited oversight, but also a lack of opportunity for retail investors, which has been exacerbated by the debasement of the dollar. Meltem Demirors, chief strategy officer at London-based digital asset manager CoinShares, said via email. Crypto inverts this power structure and has really been a bottoms-up retail-led movement, with Bitcoin markets developing entirely outside of Wall Street and the traditional financial system. Crypto markets are open and accessible to anyone with a smartphone, And Bitcoin presents an equal opportunity to investors of all types, from online shoppers earning Bitcoin back from their Fold card, to retail users buying $100 on Gemini, to institutions buying $10 million contracts on the CME, and everyone in between. Bitcoin is ascendant again as the GameStop issue takes center stage, Paolo Ardoiano said. As advocates for retail investors rail against the current structure and practices of financial markets, it is important to note that much of the work being done in the blockchain space has been inspired by these barriers, removing obstacles to normal, everyday working people that are building and seeking wealth growing opportunities has always been part of the ethos of crypto. Now, last thing, and we're going to take a look at the charts now, is with XLM. Now, XLM, a lot of different articles are coming out suggesting different numbers, suggesting, like, hey, we're getting ready for this breakout zone. We could see a 30% range, as you guys can see in the top article here, 70% gains with 1,000% potential. It's all across the board, but in the end, what happened with Stellar Lumens is it went up yesterday, and we're going to take a look at the charts, and I will give you my own opinion, because obviously, as you guys can see, lots of people have lots of opinions on it. That noise in the background is my roommate's dog, so sorry about that. He's walking on a hardwood floor, if you can hear it. He's a good dog. He's a good boy. Right, Lucky? And so we got Bitcoin first up on the charts here. Oh, once again, don't forget to subscribe. Don't forget to hit thumbs up if you guys have not yet done so. Sorry that I'm scratching my nose. And also make sure you click that bell icon. So we take a look at Bitcoin. Yesterday, Bitcoin had an explosive day. A lot of people have been saying that what's been going on with the stock market and us basically trying to stick it to the suits is the same sort of mentality of what Bitcoin is trying to do. And so the censorship, what it feels like, right? I'm using this as a metaphor. My brother was ridiculing me when I said this. But essentially, it's like a form of censorship in which we're being prevented the ability to have access to this information, this data, to be able to submit out a buy order. Meanwhile, the hedge fund groups have the access to be able to do that, right? So it's absolutely bizarre what's been going on. And with yesterday, all of a sudden decided I want to start popping. You can see here it bounced right off of this Fibonacci level that I had set up at 0.5, which is also a key level at 29,870, basically $30,000. And then that further continuation up passed above the 21 EMA. And I had also talked about this in my video. I said that the previous day, this very well could be a fake out. It doesn't establish itself as a trend until you have at least 2 days of closure to form that trend. And a strong trend base is formed off of 3 days of closure, right? So we had 1 day of closure, and the next day I decided I wanted to reverse and go back into the symmetrical triangle pattern. And then in theory, it could go all the way towards February 2nd, based on my trend at least, and which then it has to make a decisive move. So this is a fake out. It came back in, not only filled the median zone, decided it wanted to further continue the rally, past the other Fibonacci level, then went above the 21 EMA at $33,276, and then even ended up closing, bounced off of, look at this, it's so beautiful. It bounced off of my top level of resistance as well. I didn't change any of this stuff. This is from the days before. And so you can see that bounced right off at $34,067. Feels good. Look at how beautiful that is. Got it on the top, I got it on the bottom. I'm still hungry. I need some food, man. Now on the new daily candle position, closing above the 21 EMA, suggesting that we are potentially going back into a bull market after having closed underneath the 21 EMA, suggesting the bear market, which is what I said in the past. And lo and behold, what did it do? It had one major drop. It had a closure, second day of closure, third day of closure. So a very strong indicating pattern that we have a further correction down that we need to do. Next day, it recovered a little bit, tried to recover the following day, but it ended up in the red. And then over time, overall, there were multiple moments that had significant drops as compared to these previous levels. So buying the dip opportunities, filling within the symmetrical triangle pattern, was a very beneficial time before it decided that it wanted to have a further continuation rally. So if you were hoping for some time to be able to get in when people say like to buy the dip, well, there you go. I actually laid it out for you guys very, very accurately. And, I'm not always right on everything, but I've been studying the markets a lot now, and I've been learning what I feel are the most fundamental things. And if you master the fundamentals, you can be very adept in the fields that you pursue. Having a wide diversification of knowledge, yes, it can be very helpful. But in some senses, I also look at this in high regard, like what Bruce Lee said with punches or kicks. It was one of the two, in which he said, I don't fear the man that practiced 1,000 punches one time. I fear the man that that has developed and practiced one punch 1,000 times. And so the 21 EMA is just one of those things. It's not the only thing that I rely on, so don't get that impression or anything. But I've got a collective set of tools, and if you guys watch my videos, you'll see that these do fall in line very consistently, especially for cryptocurrency, and it's great reference points. Now, you can also go a little bit more nitty gritty. I don't have enough time when I do my videos to go super nitty gritty on these things, so we look on basically a daily schedule for what's going on with this. But anyways, with that going on, we've now broken above the level of resistance, so we're showing very good signs of a further continuation. It needs to close above on the daily position above here, and then we're suggesting that we have a further continuation rise. So this is also key because of the 21 EMA. So there's two different significant factors there. Making sure it stays above 33,716 for daily closure, or 33,364. Either one still shows signs that we're doing good. So this may rally up a bunch, it may come back down, it may drop down, come back up. As long as it closes above those points, then we're looking very bullish. Otherwise, if it closes back inside the symmetrical triangle pattern, back below the 21 EMA, then we're still keeping an eye on what's going on with February 2nd before it decides finally which way it wants to go, right? With the news that came out yesterday, it's really lit a fire under a lot of people, and I think that's going to help drive a lot more retail investors, especially, over towards Bitcoin as they try and have this rally go back up to the previous high of $42,000. And a lot of people are looking at $75,000, $100,000, especially for this year. 1 month is nearly done. We got 11 months left to go. Let's see what we can actually get done with this. Further continuation up, we got $37,000, another level at $38,000. I'm going to go ahead and keep this pretty brief at this point because I am running quite long on this video. Ethereum, let's take a look at that very briefly. Yesterday, very good gains. 21 EMA essentially had bounced off of that key level. That was down at 1,220. Let's take a look for today where we got levels at. If it decides it wants to go down, we have support at 1,286. We have a further decline down 1,229. That also coincides with the 21 EMA as it now has met with a previous level of support that I had established. And now it needs to go above 1,420. Back 2018 period, all-time high. Get further above that, past 1,480, all-time high period, and we're very close to $1,500. This can signify the beginning run for the altcoin season, and then a further break even higher above that. We could see it going towards the $2,000 range, and it might rally very strongly if we can get past a psychological level of 1,500 with a closure, not tapping it and pulling massively back on profits, but actually being able to close out on that. Going to be very important. Next thing we're going to take a look at what's going on with Orchid. Orchid had a daily close in the green, so there was a fake out that took place. It also basically touched my level of support right here, as well as coinciding with that Fibonacci retracement, the 0.236 level. So everything is lining up extremely well with what I've set up in the charts here, and it's almost following it to like a T. And the biggest variables that throw it off of these kinds of charts, honestly, is like some crazy news that comes out that people totally weren't expecting. You can't predict those things. And so looking at this, it was a fake out, closed out day before in red, but green above 21 EMA. So still suggesting that we're in a bull run. We've been in here for a bit, and it's just been kind of consolidating, slowly working its way up, using this level of support before it decides it want to make its final push, heading up towards probably 50 cents and $1. I wouldn't be surprised very quickly because 33 cents has been holding down for so long. They're breaking above that. People know $1 is potential, and I think there's going to be a lot of FOMO, personally, that's going to be taking place with that. So we have a level of resistance here at 30 cents or 0.3050, another level at 31 cents, 0.311, 1, and then a further level up at 33 cents at 0.3382. Break above that, and we're looking really good for a lot more potential here. Then we got the 21 EMA, which it's already bounced off of, it looks like, or well, actually very close to it. So if it decides it wants to go down, that's 28 cents or 0.2819. Further decline down, that level of support is actually coinciding with that Fibonacci level, right, like to a T. 26 cents or 0.2628, sorry, 0.2628. And lastly, we're looking at XLM. And looking at XLM, oh my God, man, the chart is just going nuts with Bitcoin on the side. $34,341. I'm still keeping this up. Look. Oh, you see red there. I just refreshed the page. But look at this climb. It's going nuts. Let's go, baby. On the road to 40K. Let's get above $35,000. There's probably going to be some major resistance taking place at $35,000 because of how fast it's trying to climb right now and how fast it went up yesterday. So keep that in mind. There's probably going to be some sell walls going on. Hopefully they're trying to short it and they can get liquidated too. God, I just despise shorting so much. I despise it. So when those people get wrecked, I'm like, there you go. Trying to go against the grain. Sure, you can make profits both sides, but me, I'm just like, I don't like it. Anyways, XLM, really green candle yesterday. It actually had 3 days of closure below the 21 EMA, suggesting that it should have a further decline down. The third day was actually pretty substantial, and I think that's what helped alleviate itself. It wasn't a slight candle in the red, because the likelihood of it having a further continuation down, I would actually be looking at that, especially on the volume side. Volume wasn't that big. So the following volume decided to actually upswing and push past the 21 EMA, making it rise quite considerably. And on the new daily position, we're still doing good. We're above 30 cents. Those highlight topics that you saw from the Google search results are suggesting like, hey, if we get above 30 cents here, we're starting to look pretty good. Well, yeah, we're almost to 31 cents. So now we're on the road. As you guys can see right here, essentially, this is being formed like so. And by doing so, we're looking at a major level of resistance. I would say that's right about at the 31 cent range. And a little bit higher, we can actually see, where's the biggest relationship between all these? I would say it's right about, well, that needs to be up higher. Let me actually get this lined up first. Probably would help, right? Yeah, right around 32 cents. Break above 32 cents, and then we're on the track going back towards the high position here at 44 cents. 44 cent break, guess what? Hello, 50 cents. Come my way. Oh, won't you come my way? I'm not going to sing it. And if it decides it wants to go down right now, we're seeing support at 26 cents or 0.2682. A further drop down below that actually would be looking at a level of support right around 23 cents or 0.2319. And let's go ahead and just do real quick the Fibonacci retracement here. I want to see where these position levels are at. Looking at it right about there. And we don't need these. Geez, that was a while ago I had those points. I don't need any of that. Let's get that bad boy saved. All right. Well, as we can see on here, drop down below, we have some support and the 0.5, which is 28 cents, 0.2848. And then we have the 21 EMA as we talked about. And then those, there's technically another support around 24 cents, 0.2485. But the key thing is if we break above this, can we see a push? I think we could. Not in one day. That's really, really unlikely. Crazy things have happened though. But we could see 63 cents. 0.6360 on a run. And look at the RSI. The RSI is still not technically overbought, even though we just had 2 really good daily candle positions. It's still got some nice room to grow. And if it can break above this level at the 32 cent range and establish itself, the RSI maybe cools down a little bit, then obviously the 44 cent is going to look way more probable. So it's making some strong moves and it's doing good. The 21 EMA was essentially flatlined. Okay, I'm going to go and wrap up the video here. This is a long video. Don't forget to hit subscribe, guys. If you're new to the channel, hit the thumbs up like button. Let's try to get to 100 likes on this video, and also click the bell icon so you can stay up to date for all the latest cryptocurrency news and technical analysis. Drop a comment down below. Tell me what you guys thought about everything today. If you want to check me out on Twitter, my Twitter is @AtlasOfficialTV. @AtlasOfficialTV. Feel free to say hi and be like, hey, I watch your channel, Crypto Atlas. Thank you guys so much, and I will see you in the next episode.